Time to address the stocks in focus this morning, and let's bring in Megha and Yatin to talk about all the newsmakers, what we need to keep on our radar. Megha, you go first.
Well, Aisha, very good morning, and look out for ONGC. The company is planning to drill 40 wells with the investment of 440 crores in the KG basin in the next financial years. Now, these blocks essentially are located in the eastern, western Godavari and Krishna districts in Andhra Pradesh and are from the pre-NELP region. The exploration licenses of these wells will actually expire in 2013, and that's why ONGC needs to hasten its process of exploration in these regions there. So a bit of capex coming in by way of ONGC. If you look at the counter there, it's testing that 100-day moving average, has given a return of close to 8% in the last 1 month there. Also look out for Reliance Power and a bit of negative building up. The Maharashtra High Court has admitted the petition seeking probe by SFIO and CBI into the merger of RNRL and Reliance Power. The company has been accused of causing shareholders loss of close to 2,100 crores on back of the swap ratio that was decided during the merger of these two companies. The hearing of this case will actually happen on the 25th of this month. So look out for Reliance Power there. Technically, the stock is looking weak. It's trading below that 100-day moving average.
Okay, watch out for that. It was in news and on a good uptake, the entire AG pack, but some problems arising out there for our power in particular. Yatin, a couple of mid-cap stocks, and power or infra doesn't seem to be getting out of news.
Yes, of course, Neeraj, first stock on my list is Lanco Infra and trouble brewing in really for their power projects. Now, Coal India has cut supplies to Lanco Infratech's Amarkantak power project. Now, this is a 300 megawatt power project, phase 2, in which Coal India has stopped its supplies and has reduced its overall supplies to this particular project. Now, Coal India subsidiary feels that the company does not have any long-term PPA into place, and that is why they have in violation of the fuel supply agreement, wherein Coal India will only supply you coal if you have a long-term PPA arrangement, and the company has failed to sign any kind of long-term PPA, and that is why the supply cuts have been made. So this will have a detrimental impact as far as their plant load factors are concerned going forward. However, 300 megawatt is a small power project, but Lanco Infratech, as you know already, the stock is under pressure. Earnings have not been good, so this would put further pressure as far as their earning visibility, especially from power operations, is concerned. Also, we have Jyoti Laboratories and Henkel India, which are in news. The board will meet on June 15th for a merger between Henkel India as well as Jyoti Laboratories. If you see the current market price, the swap ratio would come close to around 1 share of Jyoti Laboratories for 8 to 9 shares of Henkel India. And do remember, Jyoti Laboratories had acquired a majority stake, close to 51% stake in Henkel India for a consideration of 20 rupees per share. So that is the kind of valuation market is putting in place, and this is the kind of expected swap ratio is what most of the market men are watching about. But now the board will decide what kind of merger ratio would be fixed on the June 15th.